Hi, good morning, traders. John Caruso coming to you here for the morning of July 28th with your macro review for the morning. As we move through the week here, all eyes on Washington, D.C. and the Federal Reserve as the week moves on. A relatively mixed bag in the overnight in terms of major indexes. We are going to see the U.S. open modestly lower, Europe traded lower throughout most of their session, and Asia largely higher, led higher by the Shanghai index, up 0.71% in the overnight. The GOP released their stimulus bill totaling $1 trillion. The bill includes the following: an extension of additional weekly unemployment benefits, but cutting back from $600 a week to $200 a week, a $1,200 check made out to Americans who qualify, $105 billion set aside for school reopenings, and, of course, corporate liability protection to get America back to work. The Democrats plan to release the $3 trillion spending bill, but the details are still largely unclear. Commodities in the overnight, the rally did cool off a little bit in gold and silver. We are seeing gold and silver well off their highs, but likely just a way station for additional gains as the year moves on. Agriculture also did cool off in the overnight, following some pretty sturdy rallies in soybeans and wheat over the past couple of weeks. Corn also traded lower in the overnight. Our models right now are indicating that we're seeing a stagflationary setup in the market that is largely friendly for the commodity complex, so you want to be positioning long commodities from the low end of our trading range. Risk is rising in the market. We had mid-July to late August as a high probability period of risk for stocks and commodities, so you want to be mindful of that as we move forward. A couple of key levels you want to key off of here this morning. The S&P 500, I've got immediate term upside at 3284. You've got some downside to 3180. A break of 3180, you want to start keying off of the 50-day moving average down at 3112. Taking a look at the oil market, very, very tight range. I'm not doing anything in the oil market. We do have upside to 4220, downside to 4092. You want to trade that with a bullish bias, in our opinion. Gold, 1967 on the upside, 1834 on the downside. You certainly want to be adding to your gold position down closer to the low end of our range. That's all I have for you today. Feel free to reach out to me anytime at the trade desk. I'm John Caruso. Thanks a lot. Take care.